Are you about to receive a fine from HMRC because you haven't told them you need to file a self-assessment tax return? Well, these are the reasons why you might need to register, and registration deadline is the 5th of October. First up, you've got income over £150,000. Now, it might be HMRC have already contacted you and let you know that you need to file a self-assessment tax return. If that's the case, obviously you're not going to need to register again. They've already told you need to file, and if you get one of these notices, you do have to file. If you don't, there will be fines and penalties, so you can't decide you don't fancy it. Not an option. Secondly, self-employment income over £1,000. These people are probably going to need to register themselves. So it's based on turnover, not on profit. So turnover, that means if I sold cakes for £100 each, I sold 10 of them, that would be £1,000, and I would need to register it with HMRC. If you're self-employed, of course, you can take your costs off your turnover. So it would be turnover less costs, and that would be taxable profits. You might make a loss, so you wouldn't have any tax to pay, but you will, of course, need to file that tax return. Depending on the date that you're watching this, in the future, the trading allowance of £1,000 is meant to go up to £3,000, so just double check, depending on the date you're watching this, as to what the trading allowance is, being filmed in September 2025. If you have rental income over £1,000, then you are going to have to tell HMRC that you need to file a tax return. Now, there is a rent-a-room allowance that is up to £7,500. But if it's normal rental income over £1,000, then you're going to have to file. And you may have noticed a common theme here. Of course, these bits of income are not taxed at source, meaning that HMRC needs to collect its tax from you personally. It's not collected via payroll. Whereas, for example, if you earn a salary, so say you're employed and you earn £50,000 a year, and that's really your only source of income, then all your tax is being collected at source via pay-as-you-earn. So HMRC is already collecting their tax. So you don't have to file a self-assessment tax return. The self-assessment tax return is trying to collect tax off people who haven't already had their income taxed, so that the revenue doesn't lose out on taxable income. Dividend savings and interest income over £10,000. So maybe you've incorporated a limited company, maybe you're taking a small salary out and everything else is coming out as dividends. Dividends not taxed at source, so HMRC need to collect their tax. Capital gains tax payable on disposal of assets over £6,000. Now this would not include items like your car or your main residence. Probably not too many of us are falling into that category, to be honest, so I'm going to skip over that one pretty fast. Next up, this one is only going to be applicable to a few of us again, and that is claiming employment expenses over £2,500. Now, if you are going to be claiming these employment expenses and they're under £2,500, you can actually claim them on a P87 form, so you don't have to worry about doing a self-assessment. It's when you get up to these higher figures of expenses that you have to file a self-assessment. There's going to be very few of us who are going to be able to claim this much expense from our employment income. People I'm thinking will fall into this category are people like doctors who are on training contracts and they're paying all their training costs. Apart from that, I'm not really too sure who else will be claiming that much of employment expenses. I've only ever seen trainee doctors in this category. Higher income child benefit charge for people with income over £60,000. This one is such a pain, and I feel like if you earn even near £60,000, get rid of your child benefits. Such a pain to have to fill in a self-assessment tax return for that child benefit. Not even worth it, such a hassle. Get rid of them child benefits if you earn near or over £60,000. Make sure you're registering by the 5th of October, remembering that our tax years run from the 6th of April to the 5th of April. So currently we are in September 2025. That means tax returns will be due on the 31st of January 2026 for our income from the 6th of April 2024 to the 5th of April 2025. So it's that 6th of April 2024 to 5th of April 2025 income we are talking about being registered by the 5th of October 2025. Filing on the 31st of Jan 2026. Tax payable also on the 31st of Jan 2026. Make sure you get registered. If you're watching in a future tax year, of course, just skip the tax year on one. Questions, queries, let me know and I'll help you out.